Hello there. Today, I'll show you simple and reliable trading strategy that works for both beginners and experienced traders. It's an easy go-to tactic, and here's the kicker. I tested it for a month and got an 81% win rate. How could I keep this gem to myself? Are you ready? Let's go. First things first, the most important thing in this strategy is the understanding of support and resistance levels. These are the price points where movement often pauses or reverses. To identify them, use the horizontal line tool on your chart. Look for the areas where the price bounced off 2 or more times. Those are your levels. The further the price bounces off of these levels, the stronger the level gets. If the price stops falling and bounces back up, it's a support level. And if the price struggles to break higher, that's a resistance level. Simple, right? Now another thing we have to consider is the pump. A pump is a sharp price movement in one direction, basically those long candles on the chart. And in trading, what is more exciting than a pump? It's like hitting a jackpot. The price moves far from your entry point in the right direction. Why do pumps happen? There are tons of reasons: shifts in volatility, breaking news, or a surge of orders. If you're curious,
I really don't know what he said.
Covered this in detail in my video on market volatility. Check it out after this one. Now back to our strategy. Remember I was saying that if the price strongly reacts to the level gets higher? So the pump is a reaction to this strong level. Now about my strategy. I call it second pump. Here's the idea. First, spot a strong impulsive move, the pump, from a support or resistance level. Then we wait for a pullback, when the price calmly retraces to the start of the pump. And finally, we enter the trade in the same direction as the initial pump, to ensure there are no false calls. The best entry point is when the price slightly breaks the level, then pulls back to the pump's starting point. This strategy works in both trending markets and ranges, but you'll see it most often in sideways markets where the price bounces between support and resistance. I believe that this strategy deserves a like from you guys. Go ahead and hit it for me. While you do, we'll move to the practice and cover some nuances. Here's an example. Sideways movement with no clear trend. The first thing you notice on this chart is a strong, well-defined resistance level. See how every time the price touches this level, it drops sharply? That's exactly what we want. Let's focus on the key section of the chart. Here's the first pump, 7 consecutive red candles. After that, the price dropped even lower, but that wasn't another pump. It was just the continuation of price movement, just like the return to our level. Here, I rushed a bit and entered a trade in the pump's direction. To avoid getting caught if the pump wasn't instant, I extended the expiration time to 12 minutes. Now here's the perfect entry point I mentioned earlier. Price breaks through the level, then returns to pump's values. By the way, earlier on this same chart, this strategy was already working. But look at this movement right here. This is not a good entry. Price snapped back to its original level too quickly. Another scenario, the uptrend. It means that over time, price follows an upward trend. If you connect 2 lows with a line and extend it, you get a trend line. And just like a resistance or support level, a trend line can influence price movement. Always trade in the direction of the trend when it's present. Don't get scared by these extra lines. This is just another charting tool, Fibonacci levels. I use them to check if the second downward move had truly ended. I won't overload you with this now, but if you're interested, there's a fresh video on my channel explaining it. Back to our trade. Here's our first pump. We set a support level at its starting point. Now we wait for the price to break below this level, return to it, and then enter in the direction of the trend and the first pump. 2 candles should be enough, since there's a resistance level above where price might bounce. We're on a 5-minute time frame, meaning each candle takes 5 minutes to form. So our expiration time is 10 minutes. Important to note, news-based pumps won't work with this strategy. Always check if there were major economic events behind a pump candle. You can do this on investing.com. Now let's talk about additional confirmations before entering a trade. First, our favorite RSI. On a trending market, RSI should be hovering around overbought or oversold zones. Next, long wicks from the pump level. This signals that price is already reacting to the level and getting pushed back. Candlestick patterns like shooting star and hammer are great examples of this formation. I know new traders might still have questions, so I encourage you to drop them in the comments below, and more experienced traders along with me will be answering them. Hopefully, after watching this video, you won't feel like you need a degree in finance, or to start your day with a rundown of economic reports. As you can see, even just understanding the levels is enough to start making profits. Of course, you should keep learning and improving, like from my videos. So don't forget to subscribe. Stay safe and be in touch.